Tale of the two Ambani brothers, one who runs one of the biggest conglomerates in the country, with interests stretching from petrochemicals to retail and now telecom. The other brother also has his hands in various pies, from defense to telecom, but he's not been as successful as his elder brother. Mukesh Ambani's Reliance Industries has been venturing into new areas while managing to maintain steady margins in the core businesses, but the same can't be said about Anil Ambani though. Now, Yatin Motors put together a comparison on how the listed companies of both the brothers have fared since the split in early 2006. This is taking the clock way back, Yatin, but give us the numbers.
Well, Neeraj, apart from talking about market capitalization, we'll talk about the profit and the sales, how really they panned out after the brothers split. So almost 10-11 years after the split, we are specifically considering only select companies of the Anil Ambani group, given the fact that after the split we only had three businesses, which was Reliance Capital, Reliance Infrastructure and Reliance Communications. So these are the three businesses that we are comparing with Reliance Industries, because Reliance Industries split into all these companies, and of course Mukesh Ambani retained the Reliance Industry, which is the core refining and petrochemical business, which saw a 11% revenue CAGR in the last 11 years, or the period post split, which is FY7 to FY17. Profits also saw a growth of nearly 9% or something. Of course, there was volatility in their shale gas business. A lot of businesses didn't do well. We had the investments in the telecom business, because of which the profit CAGR is not as great as the revenue CAGR. But look at the returns of the shares, and after underperforming even for the last 8 years, we have the shares of Reliance Industries, which have seen a CAGR of 17%. So, good going as far as Reliance Industries is concerned, at least from the shareholder point of view. But look at, Anil Ambani, we have the sales CAGR coming in at 9%, but we saw a decline in profits. So, the profits for the group plunged by 12% every year for the last 11 years. So, a decline in profitability is what we saw for Anil Ambani group companies, which are the three companies: Reliance Capital, Reliance Infrastructure and Reliance Communications. Of course, this is led by Reliance Communications, which is now reeling under losses. So bulk of it is coming from the underperformance of Reliance Communications. And look at the return. The CAGR is negative 1.7% for these three Anil Ambani companies, which means that the elder brother made 18% for investors. However, the younger brother, Anil Ambani, destroyed shareholders' wealth, at least from the market capitalization perspective, for the three companies which split. Now, we'll talk about the debt picture and really what happened to the debt for both the brothers. From a level of 92,000 crores, the debt for Reliance Industries, the total debt stands at nearly 2 lakh crores. Of course, bulk of this is because of the investments that they made in the telecommunications business, which is Reliance Jio. But remember, Reliance Industries has an interest coverage ratio of 11 times. And probably that is the reason why such a strong interest coverage ratio. We have Mukesh Ambani, which can raise money at much cheaper rates globally. And recently they concluded a bond issue at much better interest costs. And let's talk about Anil Ambani. And look at this, how the debt levels from FY12 for the last 5 years, because bulk of the changes for both these brothers happened in the last 5 years when most of them raised debt. So we are taking a period of 5 years. And if you look at FY12 to FY17 period, most of the debt, is increasing. And we have taken into consideration Reliance Power also, because this is one company which got listed after the split. Anil Ambani tried to build that, power business, didn't do well, simply for the fact that from FY12, the debt from 15,000 crore level rose up to 30,000 crore rupees, and more or less similar for Reliance Communication and Reliance Infrastructure. But remember, if you talk about interest coverage ratio for Anil Ambani, it's less than 1 for Reliance Infrastructure, which was the flagship company, of course, for the group. Reliance Communication, the interest coverage ratio is 0.24. And for Reliance Power, it is less than 2, which is at a level of close to 1.4, which means that the ability of Anil Ambani group companies to service debt and interest is very, very less. In fact, Reliance Infrastructure and Reliance Communication are on the verge of probably turning into a debt trap. And we have seen already that with Reliance Communications. So the debt levels are increasing, and the interest coverage ratio for Anil Ambani group companies have deteriorated significantly in the last 5 years, and that is the reason why the market capitalization has also gone down. And finally, we have the scorecard here from post-split market capitalization of close to 96,600 crores. Mukesh Ambani's current market capitalization is close to 6 lakh crores, which means that we have seen almost a 6 times jump in the last 11 years post the brothers split. And look at this, Anil Ambani. Post-split combined market capitalization of the three companies that I spoke about earlier was 56,600 crores. Of course, bulk of this was Reliance Communication. And today, the current market capitalization is 47,000 crores, including Reliance Asset Management and including Reliance Home, which were a part of Reliance Capital. So, despite all that merger, demerger scheme of arrangements, there has been a 10,000 crore decline in the value of Anil Ambani post the split. And if you have Mukesh Ambani, which is a clear winner in terms of shareholder value creation and, of course, value creation for himself because he holds bulk of the shares. So almost a 6-time jump coming in post the split for Mukesh Ambani.
And that last split has got to hurt, right?
Yeah.
I'm not saying anything.
Yeah, the numbers say it all.
The numbers say it all. Yeah, I know. Though I think, to be fair, Reliance Capital has had a good run, hasn't it?
Yeah. So
Reliance Capital, which is under Anil Ambani, has had a good run.
Yeah.
Reliance Communications has had a terrible run over the last 10 years.
And if you look at 56,000 crores, I was speaking with Somit, who created bulk of this data. He said that Reliance Communication was close to 38,000 crores in market capitalization. So, most of it was Reliance Communication, which is now probably a single-digit stock, so to say, from a 4-digit level. But Reliance Capital has done fairly well. But if you look at the peers and the asset management company which they have still underperformed the industry. So, if you look at Birla Sun Life or if you look at other asset management companies, they have been able to grow post demonetizations. And in the last 5 years, the asset base much better and at a faster pace than Reliance Capital. So, the core business also probably underperformed the peer group.
Yeah, well, I think if you really want to find an explanation to this, it will be that the parent company, the mothership, let's call it that, stayed with Mukesh Ambani, and that mothership is a cash-churning cow. And that mothership, Mukesh Ambani has continued to invest in, to his credit, doubled petchem capacity over the last 3 years. And in fact, those dividends are yet to be reaped, right? Yeah. Because we'll see that start to pay out now over the next 3 years. In fact, we were discussing the other day a Goldman Sachs report on Reliance that suggested a doubling of EBITDA from these levels by the year 2020. Yeah. So, I think that business, as fuel and anything, related to energy has done very, very well in the last 10 years. That business has done solidly well for Mukesh Ambani. Whereas communications, which was amongst the biggest companies that Anil Ambani had, has only headed south for a variety of reasons.
In fact, Menaka, if probably Anil Ambani would have asked Mukesh Ambani to retain the communications business, which was of course the baby of Mukesh Ambani, and put that money into Reliance Capital's growth fund, today he would have been much better off than what he is today.
Okay. What is this? I mean, today is a journey back in time, right? 2009 for the direct tax code, 2005 for the split. Yatin, we will not comment on that.
Yeah, we won't.
Thanks very much. But what a interesting set of data points to look at when ascertaining, how business leaders work.
Yeah, and how fortunes of the two brothers have shaped.
Oh, someone say something now. Come on. Or wrap it up.
Yeah. No.